Hello everyone, welcome to another episode of FN Station. Today we will be talking about banking and financial services sector and Mirae Asset Banking and Financial Services Fund. So today we have with us Mr. Gaurav Kochar. He is fund manager at Mirae Asset Mutual Fund. He is managing Mirae Asset Banking and Financial Services Fund. So welcome Gaurav. Thanks for joining in. So first and foremost, talking about the markets, we have seen significant run up in the markets over the past few years. There's a perception that within this, particularly banking and financial services as a space, excluding PSU banks, has not participated meaningfully in this rally. So what is your view on that? And also if you can highlight what are the medium term and long term drivers for this sector?
Sure. So I think if I look at the broader markets, they've done reasonably well. And even if I look at the financial services as a sector, I think the sector has done reasonably well, barring a few pockets where, or a few names, should I say, some of the top large banks or NBFC, that has underperformed. But barring that, if I look at the overall space, I think the sector has done reasonably well. If I look at the near to medium term earnings catalyst, I think the earnings growth for the sector remains very steady. We are in a benign credit environment and that should bode well for the sector. And if I look at valuation in that context, today the valuations are steadily at long term average. But if I look at the overall return ratios, they are significantly better. So I think the earnings would catch up over the earnings and the multiples would catch up over the medium term. And taking slightly longer term view, I think a benign credit environment, a very broad based and sustainable credit growth, and benign asset quality. These are the three sort of catalysts where we believe in the longer term the banking and financial service sector should do well.
So Gaurav, while we spoke about the overall outlook on the BFSI sector, what is your outlook on different sub-segments within the BFSI sector and how Mirae Asset Banking and Financial Services Fund is placed in that context? So if you can just highlight what are the overweights, underweights, that would help.
Sure. So for simplicity, I will split this into four parts. So within BFSI, we have four subsectors: banks, NBFCs, insurance, and capital market. So firstly, talking about banks, overall we are quite positive and overweight on banks. If I look at the long-term drivers for bank, the long-term credit growth has remained benign over the last few years, and we believe in the next 2-3 years over the medium term, the credit growth should remain both broad-based as well as strong. Coming to the asset quality, I think we are in a very benign credit environment, and to that extent, we believe we have seen the back of the NPA cycle. NPAs have been falling over the last 4 to 5 years, and we believe this trend should continue. New NPA formation have also been quite slow and gradual. So we believe that the credit quality will also hold up for the banks. And coming to the end conclusion here is that as a result of all of this, we are seeing a very strong return ratios for banks, and that bodes well for the overall sector. If I look at the valuation today, banks are trading at long-term average, as I highlighted, versus their ROA, ROE, which is the return ratios, they are at a decadal high. So there is a disconnect between valuations and the return ratios, which we believe should actually catch up over the medium term. So we continue to maintain our overweight stance on banks. And now moving to NBFC, here also I think a benign credit environment should bode well for NBFCs. Today we look at the capital ratios are significantly better. The balance sheet is quite healthy. There is ample liquidity on balance sheet of NBFCs. RBI has given a lot of impetus for the development of NBFCs over the last few years. So to that extent, I believe that in this benign credit environment cycle, we will see NBFCs also do well. And to that extent, if I look at the growth, the NBFC AUM growth has been significantly better than the last 5 years or 10 years, and we believe that should continue over the medium term. And similar to banks, I think their return profile has also improved significantly. NBFCs also are reporting a decadal high kind of ROA, ROE, which we believe should help them sustain these valuations. Today, if I look at the valuation for NBFC as a space, they are trading at only a slight premium to their long-term average. But if I look at the cyclicality of these valuations, in good cycles, NBFC trade at 1 standard deviation, 2 standard deviation above the long-term average. So we believe that catch-up should also happen eventually. And now coming to insurance, I think this is one sector that has seen a lot of regulatory changes over the last 12 to 18 months. There has been a plethora of regulatory actions in this sector, both from the government and the regulator. So I think despite all these challenges, the insurance sector has come out strong. If I look at the growth has been quite benign, but only the margins have been a little volatile. Now coming to the near to medium term outlook on insurance, I think the near to medium term margin outlook remains subdued. We'll have to wait and see how the recent regulatory changes will impact the business of these insurance companies. But if I look at the broader long-term trends, I think the under-penetration story and financialization of savings, this as a theme will continue to happen. And we believe from a longer-term perspective, the sector should do well. To that extent, if I look at the valuations, it is trading at a significant discount to its long-term average. But having said that, as I mentioned, the near-term outlook is slightly muted. Once the overall environment improves and growth and margin pressure eases, I think we will turn overweight on this sector. Currently, we are more of an equal weight. And lastly, coming to the capital market space, I think the sector has done quite well over the last 12 to 18 months. The valuations have run up significantly. If I look at the medium term outlook, I think the earnings should normalize. We have been very selective in this space. We've looked at different subsectors within the capital market and have focused on the core sectors, which are more sort of structural and less cyclical. So my view is positive. We as a house are overweight, but we are playing it through only selective names. We believe in the next 12 to 18 months, the earnings momentum should normalize for these names, and to that extent, the valuations look quite rich.
Gaurav, you spoke about regulatory actions, particularly in the insurance space. I would say regulatory actions have been there across sub-segments within the BFSI space, and across regulators have been very proactive in taking regulatory measures from an investors and a consumer's perspective. So what is your take how these regulatory actions will impact the sector in the short term as well as over the medium and long term? If you can just shed some light over there.
No, you're right. The regulatory tightening has increased over the last 3 to 4 years. Be it RBI doing it for the lenders or insurance, IRDA doing it for the insurance companies, or SEBI doing it in capital markets. All of these actions, I believe, are long-term positive for the sector. It only improves and increases the transparency and also improves the customer experience over the longer term, which I believe is sort of a catalyst for the sector to do well. If I look at the regulator, they've done a fine job in balancing the growth, the penetration story as well as customer experience. And if I look at the last 3 to 4 years, our macros have remained benign thanks to the efforts taken by the regulator. So in the short term, while I agree that there could be some margin implications or growth implications, but if I take a slightly longer term view, I think all these actions are going to be long term positive for the sector.
So Gaurav, what is your view on interest rate cycle and how will it impact the overall sector in the medium to long term?
Interest rate is a global phenomena. We all await what action Fed will take, especially after what the US June inflation data suggests that there is some bit of moderation in inflation, which is a good sign. I believe that it's more of a 2H FY25 phenomena as far as the US Fed rate reduction is concerned, and we will follow suit maybe a little more gradually towards FY26. The reason I say this is because if I look at the Fed rate and the repo rate, the differential has come down to 100 basis point, which if I look at 20-30 year average has been around 300 to 350 basis point. So clearly which is implying that there could be more gradual, the rate cuts in India could be a little more gradual versus US, where it could be more of a FY25 phenomena. In base case, you are building in one rate cut in FY25. Coming to the impact or implications on the sector, traditionally, rate cut has done well. The credit growth has improved, the GDP growth has improved as a result of rate cut, which bodes well for both banks and NBFCs. NBFCs in particular, because their funding cost goes down. But if I look at last few years, the RBI has asked banks to link their retail loans with the repo rate. So as the repo rate goes down, it impacts their margins or puts a cap to their margins. I believe if I look at the next 2-3 year numbers, most of us are already building in that the impact of rate cut on margins. So it's already reflected in consensus earnings. So I don't see any meaningful downgrade as a result of rate cuts happening in India. I think it's a positive.
So Gaurav, an obvious question which comes to any investor's mind is since BFSI as a sector has significant presence in broader indices across, and eventually it usually has a significant weight even in diversified equity funds. So from that perspective, why do you feel that one should participate exclusively through a thematic fund focusing on this segment? And second question to you would be where we are, how far we have reached in the BFSI cycle, and how should one approach this category and fund? What should be the time horizon when any investor is looking at this category?
Sure. If I look at the financial services, it as a theme, a thematic fund is essentially playing a particular theme, which in this case is the financial services sector, a very long-term kind of a theme. If I look at any diversified fund, well-diversified fund, while the proportion of financial services is high, it's mostly accommodated by the large cap, top-heavy banks or NBFCs in the sector, and very little or no exposure to the other mid and small cap. Because the thematic fund is market cap agnostic, it gives us an opportunity and liberty to invest in companies irrespective of their market size. So that gives an opportunity to have some breadth of investment into the small and mid cap space as well. Along with this, if you're playing a complete theme, the other subsectors which I mentioned of the BFSI sector, that may not get adequately captured in a diversified fund, which gets captured a little better in a thematic fund. So that's why I believe that investing in a thematic fund, if you're playing the theme, is much better. And coming to the second part of the question, the BFSI cycles are typically long term. And we are seeing both structural reforms as well as cyclical tailwinds for the sector. Structural reforms like policy changes, a benign asset quality environment, broad-based credit growth, and cyclical issues, cyclical tailwinds like interest rate cycle, which is more favorable, low NPA risk, etc. This should bode well for the sector. India is expected to grow faster than the other major economies in the world. In fact, we are expected to become the third largest economy in the next 4 to 5 years. Given this, I expect the BFSI could be one of the leading contributors to this. And as a result, I believe the longer term outlook is benign, and an investor who's coming in has to come in with a 5-year kind of a view for this entire cycle to play out.
Thank you, Gaurav. It was really an insightful session. Hope our viewers would have benefited from this. Stay tuned for another episode of FM Station. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.